Okay, we're now ready to look at the problem for Chapter 19, Problem 19-2A of Wiley Plus. And if you haven't already, go ahead and pause this video in the next couple of seconds and just kind of get a read-through of what the problem is looking for, especially our opening information. And we're going to get started on how to fill this out. Okay, as I said in the previous, in my explanation type video here on this Chapter 19, there is a good income statement. It's not perfect, but it's pretty well laid out to show you kind of how to do the income statement. I think it was on page 924 of Chapter 20. It was in the next chapter. And it was just within a few pages. If you look back to my last lecture, on the last page, towards the end there, I do show you where that's at. But here for this company, we're dealing with the total year. And we're selling the bottles. We're selling soft drink bottles for 60 cents a piece. And then retailers are charging 90 cents a piece. This 90 cents a piece, that's just extra information. It doesn't matter to us what they're selling it for. All we care about is what we sell it to the retailer for. So the retailer is the middleman. We're the supplier. We're supplying for 60 cents a bottle. So if they tell us our sales, and they give us some materials and labor, and then these are our, remember, these are our factory costs, and then these would be our regular just operating expenses, our non-factory costs. And they do have these broken up into variable and fixed, except these aren't broken up, but you should be able to know, now that we've talked about variable and fixed costs, which ones these are. Are these variable or fixed? And as you'll see here and as we go through, these are considered our variable costs. The more items I make, the more people I need to make them. So our labor would change. Materials, the more items I make, the more raw materials I need to make the product. All right, so as we're going through, of course, when you're dealing with an income statement, it's for the year only. So we want to stay away from just a date. We want to say something to the effect for the year ended, or for the time ended, and then you want to put for that it was a full year range, not just the month, because that's one of the things that it's talking about here for the year. And then with any income statement, our first is always our sales. And they give us our sales. That's just the 220,000 or 2,220,000. And then if you look at that income statement on the right inside Chapter 20, our next section is, remember from our notes, right after sales, when we're talking managerial accounting, is our variable costs or variable expenses, however it needs to be worded here, same thing. Now variable costs, I'm going to want to list these. Okay. And the first thing, if you look at the income statement on the page in Chapter 20, the first item is our cost of goods sold. Well, our cost of goods sold is of our variable costs would be anything in the factory. What costs were there in the factory to make this product? Remember, that's what cost of goods sold is. How much did it cost me to make this item? And I want to know just in variable cost. So I'm going to add up the 470 because that's a variable cost, and that's part of getting the cost sold, the labor, and the manufacturing overhead portion of the variable portion of that. So now I'm going to simply bring up a calculator. And if we add up the 470 plus the 300,000 plus the 440,000, we get 1,210,000 of cost of goods sold. And then we're going to have two other items that aren't part of actually making the product, but these are separate costs, and that's what's over here on the right column. Our selling expenses are not part of actually making the item, and also our admin expenses. We have to have them, and they're necessary, but they are not part of actually making the product. So they're not part of cost of goods sold. They have their own separate line item here. $60,000, and then our admin expenses. For $62,000. So now I can get what my total here is, my total variable cost. Simply add up the items here, and just to make sure I don't mess it up, let's add them. 1,332,000. And then from back to the lecture example, if you take your sales minus your variable cost, instead of gross profit for managerial, we call this our contribution margin. Okay, so let's do the subtraction. We got $888,000. Now we get to the second part of the income statement, our fixed costs. And the first one is our cost of goods sold. Well, this was a variable cost. Labor was a variable cost. Manufacturing was broken up between variable and fixed. So for my cost of goods sold section in the fixed, I just have this one number. This $579,200. And then I have my other two that I had in before, the selling expenses and the admin expenses. And if I look back up, those both the same. They were both $50,000 each. So total fixed costs, that's a pretty easy adding, $679,200. And then as the same with financial or managerial, our final number is our net income. And I was going to subtract this. $208,800. Okay, now we move on to the next part. It says we want to calculate our variable cost per bottle. Okay, well, that's not too hard as long as I know what our variable cost is, and I do, and I know with how many bottles we sold, because I want to distribute that cost over the number of bottles. If I read through up here, nowhere does it tell me how many bottles I actually sold. But since it told me my total sale price, total sale dollars, and it told me what I sold them for a piece, I can determine how many I actually sold. If I sold each bottle for 60 cents a piece, and I sold 2.22 million in sales, I can do the math here and determine how many actual bottles I sold. So think about it if it helps you to visualize. What if each bottle only cost, or what if each bottle cost $2 a piece? You would be able to, you would say, or let's make it real easy. Let's say I sold $100 worth, and they cost $2 a piece. You would say, well, if you sold $100 worth and $2 a piece, that means you sold 50 items. And all you did is took 100 and divided it by the cost per item. 100 divided by 2 is 50 bucks. We're going to do the same thing here. That's how, whenever I come across a math situation, that's one of the things I want to do, is I like to break things down into real simple numbers. How did I do that? And I'm going to do the same thing then with much bigger numbers that don't come out quite so nice. So I'm going to take the 2,220,000 and divide that by just how I did if it was 100 bottles at $2 a piece, and divide that by 60 cents, because that's what I sell them for. If I do that, I come away, if I take the 220,000 divided by 60 cents, I come away with 3.7 million items sold. And again, all I did is took 2,220,000 and divided it by 60 cents a piece. All right, now that brings us to our next point here. Compute the break even. How many items do I need to sell? I sold 3.7 million, but how many did I need to sell to actually just break even? Well, if you go back to the notes that we talked about in my example, remember break-even point in units is your fixed costs divided by your contribution margin. All right, so if it helps, you may want to have my notes open on the side. I'm going to go ahead and open them up so I can help refer where we talked about this. I know you can't see these. This will be gone in just a second. But in my notes, we talked about this. Page about 6. So break even was our fixed cost divided by our unit contribution margin. Okay. Now we haven't calculated our unit contribution margin, and that's okay. So for this example, I'm going to actually want to go to the second page, and I don't know why they didn't have you do this first. Now we can go back. Let's go ahead and determine what our unit contribution margin is, because we have to have that. Because remember, the formula here is fixed cost divided by our unit contribution margin, which we talked about in that lecture. And remember, unit contribution margin is the sales per unit divided by my variable cost per unit. And that reminds me that I actually put this answer in incorrectly. I don't have somebody in classroom raising their hand to tell me. What I put in here was how much total units did I sell. Well, that's good, but that's not what the question asked for. The question actually asks me, what's the variable cost per unit? Well, I needed to know how many units I sold, and I need to spread that out. I need to spread out those number of units over the cost here. Remember, my variable cost up in my income statement was 1.332 million. That's what I need to do here to get my final answer. And I'm glad I caught that now instead of a little later. So I want to take that 1,332,000, that cost, and divide it out over those 3.7 million actual units that I made. And that's going to be my variable cost per unit. So we get the calculator out and do our math. And we get that variable cost per unit to be 36 cents. It comes out even. It says round to the third decimal place, but we don't need to, because it comes out a nice even 36 cents in this example. Now, when I come down here to get the break-even point, my fixed cost, I already know that. That was up here, $679,200. And I need to divide that by my contribution margin. Well, remember, my contribution margin is simply my sales per unit, which is 60 cents, minus my variable cost per unit, which is 36 cents. We need to go back to the notes that we had there in the lecture. And if we do the math there, that's 24 cents per bottle that I make in income. So now if I simply take the $679,200 divided by 24-cent contribution margin, my break-even point in units would be the 2.83 million units. Now the last item here, and the box is on the next page, but I'll go ahead and write it in on this page. Compute the break-even point, and then it says, well, maybe I can it's in dollars, as you can see the little dollar sign. Let's put it over here, we have more room. Remember with this is fixed costs, and instead of dividing it by the unit contribution margin, we're going to take it by the contribution margin ratio. Well, it's helpful to go ahead and have the ratio, so let's skip down before we do that part 2, and let's go ahead and calculate the contribution margin ratio. Remember, that's pretty simple. You just take your contribution margin, which we just figured up to be 0.24, and then you divide that from your starting point, which was our sales, 0.60. So our contribution margin, 0.24 divided by 0.6, is 40%. Now we can go back up here and finish this one. Fixed costs, that hasn't changed. That's still the, if I remember right, 679.2. Divide that by our contribution margin ratio of 40%. That tells me break even. I already know how many units I have to sell. For sale price, I need to bring in 1.698 million, 1,698,000 to get my break even in sales dollars. Sales units, we just did that above, that was the 2.83 million. Okay, our last two items here. The first one asking me for our margin of safety ratio. All right, let's put the formula real quick, what the margin of safety ratio is. Look back to your notes. I'm going to put it back up here. Remember, that was margin of safety. Margin of safety divided by I'm a terrible speller. Anyway, margin of safety divided by our actual sales, or the sales where we want to be. So to get our margin of safety ratio, we have to first find our margin of safety. Remember, our margin of safety is what is our sales now less our break-even in sales, which we just found here. So over here, let's get our margin of safety. And our margin of safety was the 2.22 million minus our break-even sales, which was right here, 1.698. So if we calculate that, that is $522,000 of a safety margin. So now that I know that, I can go ahead and I'm going to do it right below here. 522,000 divided by the 2.220 million. I have a margin of safety ratio. Let's go ahead and do that. It tells us to round to the nearest percentage. So 522,000 divided by 2.22 million. I get 0.235, a whole bunch of numbers. If we round that to the nearest percentage, that would be 24%. Last item, determine the sales dollars to earn $82,000. This is just like that one where we talked about in my notes the break-even point, and then the next one was target profit. That's what this is. This is our target profit of $82,800. So remember, all you got to do is exactly what we did for break-even, except we need to add now an extra $82,800 to my fixed costs. Okay, so we have fixed cost of $679,200 plus the $82,800, and then the same formula that we did divided by our contribution margin And our contribution margin was the 40%, so 0.4. All right, let's work this out. I got 679.2 plus the 82.8. And divide all that by the 40%. I need to sell, in dollars, 1.905 million in sales dollars. All right, that wraps up here for week 6, chapter 19. If you like this and found this helpful, please comment or email me. It helps me to know how well things are going. If you've already done that in previous chapters, don't worry about it. But if you're new, please do it. It helps me to know how helpful these lectures are, if they're worth the time that I put into them.